Today is today is September 18th, 2023. It's 11:35 p.m. Today is a Monday, and it's a slow day for fast food restaurants on a Monday. So I got out of there at about 9:30. I washed dishes furiously, got things done, turned things off, and then mopped and took out the trash and broke down the boxes and things like that. So what I need to do is actively engage in describing the trade that I will be making. Okay, so what I need to do is to create a sequence of events that allows me to make the right trades. And so I had created a watch list, and I used the watch list to on TD Ameritrade. I used the watch list. That watch list is useful for me because it has already uh, established a screening. I've created a screening which these stocks were listed based on the fact that it had a volume and it had a price range and it had different sectors like banking, like semiconductor, like airlines and gaming and consumer products and semiconductor. And these are the list. These are uh, the various types of stocks that I'm using on my watch list to make my trades. And some of them have wide spreads, and some of these have a large price tags on them. Like Adobe is pricey, Costco is pricey, um, and Nvidia is pricey. And some of these stocks are actually like Wells Fargo and Citigroup and JP Morgan. Some of these stocks are more reasonable in their price ranges. So I use that list. So what I have to do is the pre-market data useful? Is it useful? Is it indicating to me something that I could use to trade? Is the pre-market data actually useful? Okay, so I'm considering that because what will happen is the pre-market data has to have some sort of stimulating data that supports the once the opening bell rings, it has to be able to support, it has to justify its price when it opens at the beginning. So when a stock uh, uniquely moves higher compared to the QQQ and the Dow, okay, so is that telling me something? So I need to look into that as well. I need to figure out, okay, so if it's gap opening, then is there a higher propensity of the stock to move in the upward trajectory? Okay. And what will happen? Are there normally a pullback before it moves back up? Okay, that's something that I need to consider. And how long, what kind of duration am I looking at? So I need to look into that as well. And so so if my setup is to look for a trend confirmation, whether the trend confirmation is based on the continuation at the open, okay, when I see a continuation of that trend, okay, that continuation is essentially riding, and it is essentially reinforcing, okay, but it is not partaking in that trend. Okay, so is it displaying a continuation type of a pattern like a flag, or is it showing some sort of a triangle? Is it showing a pennant? Is it trading in a range? And is it showing that it's testing the high again? Is that what it's doing? So those are the signals that tells me that it is attempting to push beyond its point in the trend. Okay, so that's one way of looking at it. So I can look at it from that perspective based on several of the chart chart signals that I would see, right? That's where that's where the beautiful part is. It is I need to become more and more familiar with those particular continuation variations of the continuations within a trend. Okay, so when I have like 10 or 20 or 30 different types of scenarios, which essentially are just essentially like a sideways action and then moving up. But that sideways action could be various ways to display that sideways action, because what would happen is that if there at a certain point there could be more sellers, and so it could dip, but the reality is the price has been justified in returning to the value, and it could climb higher, and therefore even if there's a temporary profit taking overwhelmed by more individuals who are trying to sell, then it is possible to dip and then start to come back, go right back up. And those are the signals that I need to be intimately familiar with so that I can look at it and then identify it and then enter based on my conclusion. That is so I would be so what I would be doing is parsing through the list of stocks that I have, and are those stocks exhibiting it, and I can get a small hint from the Dow Jones and look at the QQQ, and then also look at the VIX. Okay, so those are the three areas that I can look at just to view it, because what will happen is the stocks will reflect what the QQQ is doing, because QQQ and the Dow and those are comprised of the stocks that are there, and generally it'll generally, unless there is a singular stimulation or catalyst that impacts that stock, it's going to deviate greatly from the indices. Okay, so I would be looking through all those, and I would be looking for a continuation pattern. So I would be looking through it. I would be looking for it. It would open. I would look for it. I would peruse through. I would look at the indexes first. So this is what I would do when I make a trade. So I would look at the indices, like I have the VIX down here, I have the QQQ there, and I have the Dow, and I'm looking at it. I'm looking at what it does. Is it red? Is it green? Is it moving sideways? Is it seriously in a deep downtrend? Is it because of the news of yesterday with the FOMC meeting? Is that why it's doing that? Then I can look at it and anticipate what's going to happen. And is the current set of candlestick formation, is it portraying a continuation, or am I looking at it? Do I still need to wait for it, or is it attempting a major trend reversal? Okay, is it a trend all day, or is there like that? Okay, what is it doing? So I've already established that on a statistical basis, 20% of the days is based on a trend. It trends. And S&P Capital performed a study on it, and they say that if they look at a particular volume, apparently it will trend. Okay? So they have an indicator. They have a confluence that they look at that says that if a certain characteristic occurs, it is highly likely that there is a probability, there is a chance that the trend will be a all-day trend kind of thing. Because that happens. That happens going down or going up. It happens. Or am I looking at a situation where there's like 3 or 4 major trend reversals, right? So it could be, the stock could be inching up, but it will move based on the fluctuations reaching the highs and lows of the day's move. And so those are the things that I need to look at. So when that happens, I can see the major trend reversal to ride that trend going the other direction until I see that it has converted itself from a continuation pattern into a major trend reversal. And those are the things that I would see to look at the onset of that particular signal to ride it out as much as I can. Okay. So what I would do when I make the trade. So now that I'm thinking about it, I'm thinking about how to make a trade. And so when I'm looking at it, I'm looking at the Dow, I'm looking at the Qs, and I'm looking at the VIX, and the VIX is pointing down, and Q is pointing up, and Dow is pointing up, and I'm obviously I need to be looking for an opportunity to catch on to a continuation when that happens. When that happens, I'm looking for a continuation with a reservation that that particular thing could end up as a major trend reversal. Okay, so I would be looking for that. But the first conclusion that I would have at the open is that if it quacks like a duck and it walks like a duck, and then I would have to trade like a duck. Okay, and so if there could be it could be an instantaneous reversal if there's a parabolic move that occurs at the beginning, because any spikes would tend to have a spike down of essentially equal value. But if it moves on a gradual and a high volume kind of a situation, it may last a significant amount of gains before profit taking occurs. And so that's what I would be doing. So when I identify that as a continuation, okay, I go long. Okay, if then I'll go with the trend. Then if it's a major trend reversal signal that I see where one of the significant factors is that one of the candles becomes significantly big around the area where there is major support. If there's a support and it breaks that support, it is defined as a major trend reversal to a significant amount of distance until at a point where buying starts to take effect. If I'm looking at it, buying, and then it reverses, drops down, and then moves back up. Okay, so I need to look at that as well. So in that situation where I pick the second part and I view it, and it is a major trend reversal, I would get in, buy a put, and hold it. And I need to keep monitoring it, monitoring the action to constantly ask myself, is that candle displaying a continuation, or is it signaling some sort of a major trend reversal or minor trend reversal at a point where I need to exit before my gains are depleted? And so I need to be constantly monitoring that on every candle as I day trade, as I trade. And when I got into that, I know that where my stop loss is, and I have to set my stop loss. Okay. Once I set my stop loss, then I know how much I'm going to lose for that day. And if I lose, then I need to really think about what I'm doing right. Am I doing it right? Have I steered my mind into doing something that is emotionally charged, or am I completely detached from the emotional trading that I have, and am I making the right decision at that moment? So I have to reevaluate that instead of just going with my previous thesis and getting stopped out again, which happened like 8 times. On Friday. So when that happens, so I would enter, and then I would have a stop loss, and then when it gets to a certain point, I observe it. I would also have a limit order, which would be based on the likelihood of that stock moving in that direction before it pulls back. Okay, and so ATR could be utilized at that point to say, oh yeah, maybe that might work. So that's how I would trade, and then either it hits my limit order, or it hits my stop order, or I get out based on what the chart formation is doing. So there's 3 ways to get out of that trade. There's 3, 1, 2, 3, boom, boom, boom. Okay, one of them is when I lose, it's automatic, so I don't have to think about it too much. But I would like to have this problem where I'm trying to evaluate how much gain do I want. That's a good problem to have. Okay. As the owner said over on Saturday when we had this meeting, he says, "Oh, there's so many pins on this map of customers who came in to place their pins in there, and one of the customers says, "Oh, I can't put my pin there because it's all overcrowded." And he says, "Well, that's a good problem to have." Anyway, so that's the trade that I have. Okay, that's the trade I have. So I need to like repeat this over and over again until it becomes like I can. It's like on the back of my hand. It's like so I need to repeat this strategy that's how it works. That's how simple it is. And all I have to do is figure out specifically the pattern that I have, and then recognize where the stop loss is going to be, and recognize where the possible limit order is, and then all I have to do is monitor it until a certain point when the trade needs to end. That's it. Okay? That's simply the trade that I have. And if I can make a small amount of gains each and every day, okay, with that strategy, then I will at the end of the month be able to pay, maybe go to a buffet and pay for that buffet out of the money that I make from the market. Okay, so when I keep doing this week after week after week after week after week after week, then the fact that I have been able to demonstrate my efficacy in day trading, I can also step it up. I could also I could also make it so that it's a multiplier, and the gains that I will have is going to be a multiplicative kind of a situation. Okay, all you have to do is follow the blueprint, just increase it a little bit, and then for a time period, it's going to be the same. The results will be the same. That is the strategy that I have.